what all sectors which were in focus, stocks which did well from the Nifty 50 basket, or where we saw the underperformance. Following that slide, we talk about our view on both Nifty and banking index, and some of these stocks which should be on your radar in the next week for trading bets. So let's start with a quick disclaimer first that the idea behind this webinar is to share the insight. It's not a trading or an investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. Now talking about the market, this consolidation, this whipsaws continues, but finally we managed to end the week with the gains. We've reclaimed 22,000 mark in Nifty, 1% gain in Nifty and Sensex both. Among the sectors, auto did exceptionally well, thanks to Maruti. And the other sectors, all heavyweights also participated, like Bajaj Auto and all. Followed by IT, energy, banking, and financial services. So the major highlight was banking. That we kept on mentioning that the underperformance of the banking is weighing on the sentiments. So finally, we saw some respite on that front. At the same time, middle counters, we witnessed some profit taking post numbers. Then media and FMCG, they were all slightly in the back foot. Now coming to the top 5 performers. So for the obvious reason, 2 names from the auto basket, M&M and Bajaj Auto. So that was obvious. And then from the IT space, Wipro did exceptionally well. Strong catch-up move, 11% kind of a gains. And recovery in UPL and BPCL, that also added to the stability. On the losing side, Hindalco post numbers witnessed a sharp cut, nearly 13% kind of losses on week-on-week basis. Then we have Grasim, ITC, HUL, and Sun Pharma. So, we can notice that the defenses were on the back foot. ITC, HUL, Sun Pharma, they all witnessed decline. Sun Pharma is doing normal profit taking, but for ITC and HUL, it was a continuation of the trend. So this is how the week looks like. Means index positive, majority of sectors on the positive side, defensives and select stock sectors which were doing earlier well, they witnessed some profit taking. So it was kind of a mixed trend, but majority was aligned with the index. Now what we are anticipating in the Nifty for the next week. So this is the daily graph of Nifty 50, and as we can see that it's a broadening formation basically. So what broadening formation shows that consolidation, but the range is getting wider. So this is what the second instance of the test of the lower trend line, and this was the upper trend line where we retested last. So our view remains the same, that before we talk about the third retest of either of these 2 lines, 22,150 is the third week, if I'm not wrong. We have been reiterating this level, that until we reclaim that mark, I doubt that we can inch toward the upper band or move towards 22,500, 22,800. That is the upper band of this range. So this range is basically will continue to act as a hurdle. Downside, now the support has shifted on higher side. So earlier, 21,450 was a zone which we were maintaining as a support, first support. That has shifted to this yellow line, that is the 20 EMA, which is around 21,700 mark. So 21,700 first, and then 21,450. So that will be the area in case if there will be any profit taking in the coming week. So net tone is positive, but since we have almost reached to the record highs, and the last 2 days of price action in the index is not very conducive, means a gap up opening followed by a very narrow range trading. So this is not something that gives us confidence that yes, we are set for the next leg of the up move. Though the tone is up, banking is participating, everything looks good. But the way we are seeing the market inching higher, that is something which is not giving us enough confidence to go outrightly buy on the index. So one should maintain positive at the same time cautious approach when it comes to the index, and prefer option strategies, means through bull spreads or through ratio spreads. One should trade this market if you are an option trader. And for the future traders, it's a buy on dip market basically. So intraday, if you get any dip, then only you should venture, because now 22,150 is very close to that mark, around 150, 130 odd points that we are away from that level. So the risk reward is not favorable. So wait for any dip. Obviously not the 21,700. If you are let's say trading for the intraday, then the level is going to be different. But positionally, yes, 21,700 is going to be the next major support for the week. So in the interim, since the tone is positive, we are largely focusing on stocks which are aligned or which are showing resilience, which are trading at their record highs, and sectors, themes accordingly. So the major focus area is on the buy side when it comes to the Nifty and stock specific approach also. This is banking, which was bit wobbly till last week. We hardly had any clarity that on which side we are going to see the market witnessing the next directional move. So this is the long term averages, 200-day on the weekly chart, this red line you can see. And the last week we spent a good amount of time around that zone before making this recovery. So this shows that bulls somehow managed to hold this level, but now to reverse the negativity or to negate the underperformance, we need to reclaim this mark 47,000. That last week also we have talked about the same, that we need to reclaim this level to negate the positivity and fill this gap that we have on the daily chart. So first is going to be 47,500 and then the 48,000 mark in the banking index. So remember two levels, 22,150 and 47,000 marks. So these key levels remains intact, for to change the positional trend and to trigger the next leg of the momentum in both the indices. Downside, of course, this zone close around 45,900, that this 20 EMA, and next major is going to be closer to this 45,400 zone. This is the retracement support area. So in banking space where we are focusing, so PSUs, large PSUs named like SBI, Bank of Baroda, Canara Bank, PNB, they are doing exceptionally well, and we are seeing consistent buying also. HDFC basically, which everybody was focusing on for some recovery, we have finally seen some rebound in HDFC Bank also. So HDFC Bank, ICICI, Axis. So the preferred names remain the two, that Axis and ICICI. The others we are focusing on for recovery. So for HDFC, 1420 is the first hurdle. Once we cross that mark, then 1460 could be the next zone where it might heads to. So obviously it's going to be very gradual up move in HDFC is what charts are indicating. So we are focusing largely on the top names, not the second leg of the counters. So focus on the top names, and since the Friday closing is not very encouraging, we might get a dip, maybe closer to around this 46,140, 46,000 zone before making any further progress and attempt a recovery towards 47,000 mark. So it's a buy on dip for the banking also, but stay selective. Now this is about the key indices. Now let's talk about stocks. So first name on the list we have from the IT space, Emphasis. So basically we need to identify stocks wherein we are seeing consistency. At the same time, they are comparatively less volatile, means they are low beta counters. So Emphasis, post this range breakout, has been holding above the medium-term moving average first, then entire, and this fresh pivot above the short-term averages. And this week it was a very decisive week for the stock, with decent volumes. So we expect this recovery, this rebound to strengthen further for Emphasis, and the stock may inch toward the previous record highs, something what charts are indicating. So Emphasis should be in your focus from the IT space as a buy candidate next week. Next on the list, Tata Communication. So Tata Communication post this trend line breakout was inching gradually higher, then followed by a very narrow range consolidation, a triangle pattern formation, and may finally witnessed a breakout from the same this week. So this gives us confidence that yes, the pause that we were seeing in the stock post this up move, it is over now, and it can again inch toward a newer highs. So Tata Communication is another counter which can be considered for long trades in the next week. And lastly on the list, Z. So Z, this consistent underperformance, something that charts are indicating which may continue. Why we are saying this? Post this range breakdown, gap breakdown. You tried to fill this gap. There was an attempt that stock inched toward the gap zone, but it couldn't sustain. And now, last two candles, this indicates a possibility of resumption of the downtrend. So in case if markets gives you the opportunity to go short, Z could be one of the candidate alongside with Bandhan Bank that one can look at. So net, Nifty, Bank Nifty, tone is positive, but since we are closer to the resistance area for the Nifty, 22,150, we need to be positive yet cautious and stay stock specific rather. Instead of focusing more on the index at the current levels, wait for any dip for fresh buying. Once we cross this mark, then again momentum will continue and 22,500, 22,800 could be the zone. In banking, same view means be selective, tone is positive, 47,000 is something that one should keep on radar. On stock specific front, we talked about Emphasis, Tata Communication, both for the long candidate, and Z if you get the opportunity to go short. So this is all from the presentation part. Now we'll have a quick feedback poll. So please fill in your feedback and then you can start posting your questions using that Q&A tab. If you have any question, you can start posting your question using that Q&A tab. Those who have done with this feedback, they can start posting their questions. And please restrict your queries to the sectors or the general market instead of any stock specific queries, because the idea behind this webinar is to equip you with the information which is required in general to participate in the market. Means next week what one should anticipate, let's say, about any particular sector. Stocks you can choose as per your wish, as per your risk profile. Sectors definitely we can talk in detail. All right, so let's start with Q&A now. All right, so first question from Mr. Avik Ganguly that are oil companies are good for buy now. So see, if you are talking about oil marketing, I understand the kind of quantum momentum that we are seeing in this OMCs. So if you are very disciplined, means if you respect that risk and you maintain your stop losses religiously, then definitely one can look at these names on dips or in correction. But if you have noticed that last 4 5 weeks, the move was almost vertical for all these OMCs. There was hardly any pause or any consolidation. So these kinds of move usually end with some profit taking first, followed by the range bound move. So if they like last week we had like in a couple of days when they corrected sharply. So just to avoid the situation that you are trapped in a good stock at the wrong price, maintain very strict stop losses and be quick in exiting those positions in case if something goes wrong. So yes, the momentum is intact, but one needs to be uh, selective in this space. So BPCL, IOC, and HPCL, among all these names, BPCL and HPCL, they are doing comparatively better, in the recent move. Okay, next view on banking and IT sector. So banking, anyways, we have discussed in detail that 47,000 mark is something that we are eyeing. And good part is that HDFC has started witnessing some recovery. So that is giving us comfort that, the private banking majors which were underperforming, though still the underperformance is there, but uh, some bit of respite. So if we see this recovery once HDFC crosses and sustains above 1420, then 1460, 1470 is going to be the next area of resistance. So that would give comfort to the participants. So as of now, 47,000 mark for the banking index is something that we are eyeing. And when it comes to the PSU pack, be very selective. Prefer the top names like SBI, Canara Bank, Bank of Baroda, BNP. And yes, IT as a sector looks strong to us. Means, in fact, last week also we have discussed about which sector that one should prefer. So I named IT. Though this week it was more of like sideways tone that we were seeing in the IT majors. But I feel sustainability and uh, you know uh, the kind of pause or consolidation that we are seeing in the IT majors, it's very healthy. So be it Infosys, TCS, HCL Tech, especially the IT majors, and from the mid-cap IT name, we've talked about Emphasis also. So all these names are definitely looks positive to us. So yes, one can remain selective in this space also and continue to look for at buying opportunities on dips. Okay, next we have Mr. Rajesh Lal on auto sector. It's likely to the performance continue next week also. So there could be a bit of a pause or breather in auto sector. But yes, the kind of move that we had in some of these auto major is definitely encouraging, especially in stock like Maruti, Bajaj Auto, TVS. They all are trading at the record highs. We are left with Tata Motors also. We can include that list and Hero Motoko and Escorts and Eicher. These are the two names wherein we are seeing catch-up move now. So it might witness some consolidation. It's going to be healthy if it happens. And the sectors, these stocks, which have not participated yet, like Eicher and Escorts, we can see some catch-up move in those names. Okay, though this question is out of what we've discussed during this webinar. Ms. Surbi Kumari wants to understand about the 15 minutes candle. So it's simply just to understand 15 minutes, 5 minutes, or any time frame. So the market start at 9:15 and by 9:30 it finishes 15 minutes. So if you'll see that duration on charts, so it will show you a single candle. So that is how, and by the time at 9:45 you can see two candles. So though there's no significance of 15 minutes, 5 minutes in isolation. So if somebody is seeing in combination to something, and be it some chart patterns or candlestick patterns, then it makes more sense. So just for your information, that it's 15-minute candle is 15 minutes spent in the market in a candle formation. So as we've discussed about SDFC, otherwise I usually avoid naming any other stock apart from what we shared in the presentation. So SDFC is something that everybody is closely eyeing, and we have a query from Mr. Gautam also regarding the same, that we have closed near 1420. So yes, if it holds 1420, then 1460 is possible in the coming week. And if you have any positions, so if especially on the short side, you should reduce. This is what charts are indicating. Okay. Stock specific queries, please avoid, because if you're associated with us, definitely you can send your queries over email to your branch and your business partners. They can share with us. But anything related to any particular sectors, we are happy to answer. Stock specific, stock specific. See again, more stock specific queries. Yes, so next we have Mr. Goel on aviation sector. So aviation space, we have just two names to look at. We have a couple of names which are indirectly associated with the sector in BSC, but largely Indigo and SpiceJet. These are the names, and Indigo obviously, rules this segment both in terms of price action and otherwise also. So we feel that if somebody is planning any investments or trade, the preference should be given to Indigo for sure. And the recent price action also reaffirms our view. So again, we have a query on how to read charts. So we in past we did seminars, webinars, which we have kept on our YouTube portal. So you can go and start learning at least the basics, the moving averages and trading concepts. We have all those webinars on our YouTube channel. So definitely you can go ahead and watch those videos. Yes, so next we have defense sector is consolidating. What's our view? So uh, in a way, it's a mixed trend that we are seeing within the sector. So, like of late, BEL has recovered very strongly, while HAL and the other names, they are slightly on the sidelines. So earlier it was the BEL which was trading dormant. So it's not that the sector under consolidation, but yes, the tone is largely positive. And if we see any consolidation, it's a buying opportunity. Uh, until we break the short-term averages, if it's a trading position. So just to give you an example, that just if you track any particular stock, let's say just put 20 EMA on the daily chart, and uh, until we break that level, this shows that momentum is intact. So that holds true for any of the instrument also. If we put 20 EMA on the daily chart. So mostly stock from the defense space, they are still holding or hovering around that area. So this shows that momentum is there, but it's a normal consolidation, healthy consolidation that we are seeing in the sector. All right. Next, we have pharma names. Some of these pharma names. So just to talk about pharma as a sector, I feel that one needs to be stock specific in this space also, instead of like focusing on the entire space. So stock like Dr. Reddy's, Granules, Biocon, wherein we are seeing fresh traction again. So instead of focusing on any particular sector, in a market like this, when we are again at the record highs, stay stock specific. So within the auto, as we've discussed about some of these stocks likely to witness catch up move. So if you stay stock specific, it becomes easier to trade. And if you have made investment, then it's a different ball game altogether. So for that, obviously you did not chase momentum uh, and stick with your names until the rational changes. Okay, next we have railway related stocks. So railways, I feel that one should be cautious in the entire PSU space, and as I've discussed about OMCs, that one should be very strict with their stop losses. So be it railways, other PSU banking counters, anything which is related to the PSUs. Uh, the momentum is intact, no doubt about it. In some of these names, we are seeing newer highs also, but the kind of decline that we see in these names is equally swift. So if you are very disciplined, if you can maintain your stop losses, religiously, then only you should look at these names. Otherwise, you can avoid. See, Jayaraj Krishnan have asked which book you suggest for study, basic study about share market. So you need not to buy any book. In fact, the exchange website would give you enough information about how the stock market works if you want to understand the basics. So just the exchange website nscbsc.com that will give you ample of the information that how the market works. So Ms. Kumari, if you have any, we never talk about any stock specific recommendation during the presentation. Also, we just share our view on some of these names which look good on chart. So we talked about Tata Communication. We talked about the other name, Emphasis, which look positive to us. So if it fits in your criteria, then you can consider. Okay. See, this question we have answered multiple times, especially about EVs. So it's not a 1 year, 2 year story. Especially, it's a new theme that we, you know, every now and then start seeing some bit of a traction, gaining traction if some news comes into the public domain. So it's not something that one can look at this particular theme for a year or two. It's a multi-year kind of a investment theme if you are planning. So if you are planning long-term investment, then obviously you need to check which companies are financially strong enough, from that perspective, and they have made noticeable progress in the EV space. And same hold true for power also. So if the view is short term, then uh, both these sectors or themes are witnessing a bit of a profit taking, and that might continue considering the kind of rise that we had in EVs and power stocks. Okay, next we have infra stocks. So infra is a big basket. Basically, it includes cement, metals, everything. So again, cement counters, they're largely doing well. Middle counters, if you exclude a couple of names like Hindalco, the rest of the pack was good. Means in this week, again, we saw that National Aluminium made a new high. Then we have strong recovery in Tata Steel sale. VEDL, yes, is slight in the back foot, and we are seeing mixed other names trading in consolidation. So stick with stocks in this space which recovers, equally sharp with recovery in the market. So those who are not participating in the move with recovery in the index means there's something wrong with those names. So just a simple way of looking things, when it comes to trading, short-term, positioning, that stock or sector which recovers equally sharp with recovery in the index is something that one should focus on. What is your favorite tool of charts which you prefer should look? So again, I've just shared that one parameter that I closely track if I am tracking momentum for any stock, that is 20 EMA. But otherwise, there is no fixed parameter. So obviously, it changes with the market that we are in. So if we are in, let's say, consolidation or congestion, the way we are seeing things, we track is something different to what if we are in the trending market, means wherein we are seeing consistent recovery, or if we are seeing a reversal either side. then things become different. So there is no fixed parameter or tool that we use, to analyze their, stock or any index. All right. So with this, we have answered all the queries. Thank you everyone for participating. Next week, same time, we'll connect again. Till then, take care. Bye.